Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. Well, I mean, it's come to that time. My partner wants to sell our portfolio. I kind of don't want to buy them out. So we are going to be selling 7 properties that we've acquired over the last 5 years in the next couple months. Before I get into that, we're going to analyze one of the deals that are actually getting listed on the market today. So if you're working with a realtor out there, definitely check out 1797 Main Street West in Hamilton. It's listed right now on the MLS. You can find it on Toronto. You can find it on Hamilton board. Yet I want to talk to you guys before that. For those of you who haven't subscribed, please subscribe. I know 70% of the people watching this video aren't. Go ahead and hit that subscribe. Turn on the notification bell so you get notified when all these great deals come up. Number 2, smash the like button. When I don't ask you guys to smash the like button, apparently nobody does. The last video we did with Mandy, I think we have 20 likes and our normal is around 50 to 60. So let's smash this like button for Mark selling his portfolio. Let's see if we can get this to 1,000 likes. I do appreciate that. Also, brand new, we have a new premium subscriber service. It's $8.99 a month. You go ahead and you get the analyzer, and if we make any changes to the analyzer or anything like that, you will get updated. We're going to do at least 1 or 2 live streams a month with Mikey Ulano doing the stock charting as well. I'm going to be putting an analyzed deal up there at least once a week, maybe more, that's for sale. So if you guys are interested in buying anything, then those are going to go up there as well. So yeah, that's going to be there. Check it out. No obligation. If you don't want to, don't do it. But if you want an analyzer and you want some other free stuff that we're going to be adding to over the time, happy to have that there. Happy to have you guys subscribe. All right, let's get into the numbers. It's a great building. It was the first building we ever bought together. We bought it for around $2 million way back then. It just shows you what prices have done. So, if you guys are working with a realtor, it's going to be listed on MLS this afternoon. So literally before I post this video, it's getting listed. So you'll be able to find it there. We are holding back offers until next Monday. Sorry, the asking price is $3.5 million. I don't know if we even need to go through that. Multifamily world is pretty popular as the rest of the real estate world is. I don't know. What do I know what purchase price is going to come in at? I'm just going to put it out there. I don't know if this is what's going to happen. I don't know if we're going to get this high, if it's going to be this low. I don't know. I'm just kind of guessing out there like the rest of you. If somebody wants to come blow my doors off with higher price, then great. If not, then great as well. Obviously, this building is getting sold one way or another. Let's just call it $4.5 million. First mortgage is 65% from the bank on that, which means that we have about $1.575 million down payment. Land transfer tax, government always has to get theirs. Immediate repairs and renovations. So we've renovated 10 out of the 22 units, so there's still 22 units left. We've been averaging right now around $25,000 a unit to renovate. I probably take about half that money right now and then use the rest from cash flow. So it's about $15,000 or $150,000 we're going to need. And then inspection, appraisal, financing costs, and legal costs. Financing costs should be low because we already have a clean phase 1 that you can basically use. All right, gross rents today. So gross rents today are $22,486 and 29 cents. And if you're wondering why we get the cents in all of them, is because we in Ontario can raise rent like 2% or 1.8%. It's never a round number. So therefore, my $1,700 a month rent I get now turns into $1,734.82, right? Something ridiculous like that. Anyways, we get $500 a month in laundry and about $300 a month in parking. The utilities. So we've just bunched all the utilities together. That's how I get them from my bookkeeper. So, and I do drill down some like every quarter to see, if anything's rising or not. Yet, we've just put it out there as a one cost number. So that's a gas, hydro, and water. And obviously the tenants all pay their own hydro. So it's about $2,400 a month. Property taxes that we pay the great city of Hamilton is $52,455. insurance from my good friend Dan Tetzlaff from Hub, who's going to be upset when I sell all my stuff, unless he gets the business again. Obviously, property management, repairs and maintenance, 5% each. And then no resident manager. I think 22 units too small to have a resident manager. Kind of doesn't need to be done. And then laundry rental is about $200 or $200 a month, which is $2,400 a year. Monthly net operating expenses are about just a bit under 10 grand for just a bit about 120 a year operating expenses. Though obviously we have our vacancy that we need to add, and you know, Hamilton's super low right now. But I'm going to use about 2% vacancy. I mean, I think it's averaging around 1%. 2% is a good deal. And then I'm going to get an interest-only mortgage. I usually get that for the first year I buy a property. It does help with cash flow. So when I'm turning units, obviously I'm cash flowing the building and I'm using that to renovate more units. So at 5%, obviously I'm paying $12,187 a month. And you know what? I have a monthly cash flow of $771.93, and it's right around a 3.5 cap, which, to be honest with you, is not that bad. When I'm looking at these buildings, what I want to do is I want to try to find out, well, not try to find out, I want to find out what my average rent is. So a little bit over $1,000 a month, which we could have done in our head, but just wanted to be more accurate. So 1,022. So obviously there's been 10 renovated units in this property, and you know, they've gotten rents up, yet when we started renovating it and putting them in, I think we were getting $1,200 to $1,300 for a 1-bedroom, and now we're getting $1,500, and we were getting $1,400 to $1,500 for the 2s, and now we're getting $1,700 for those same units. So there's going to be, even when those people leave, you're going to be able to get the rents up just by doing that, yet I would say you probably have about a 55 to 60% lift in your rents just from this number right now. This is what it is. So I'm $1,000 a month in my rentals. Now we're going to come here and we're going to do what my price is, or what can I get it to. When I do this, I'm just going to sit here and I'm going to say, okay, well, what was my first mortgage over here? So my first mortgage was $2,925. And this is my after repair value. So I put that number in to figure out exactly how much I'm going to pull out at the end of the day. Is this going to be 100% BRRRR? Is this going to be how much am I going to have left in this property after I can fully turn the property? Down payment was $1,575. So obviously finance, we don't have a land transfer tax. We had an inspection I think it was 2,000. We'll just go back and have a quick look. 1,500, 2,500, 2,500, 2,000. Okay, so we can be accurate. We had immediate repairs for 150. You don't want to skip that. It's a decent sized number. Appraisal, financing costs. We still got our clean phase 1, so we're still doing good. So we have $2,000 legal costs. So let's make sure. 1,819,975. 1,819,975. Look at that. It's a beautiful thing when numbers come together. All right, so now let's do gross rents. This is what I can get today. So again, when we started renting this unit, so I'm going to use $1,500 for 1 bedroom, $1,700 for 2 bedrooms. When we started renting this, I mean, we were getting $1,200 and $1,400 for those same units, and that was only 4 years ago. So I mean, prices have gone up 20 to 30% in the rental market. So do I expect that's going to happen again? No, and yet, you know, you can expect a 2% increase a year. So every year you're going to get more and more revenue from this property. Yet I'm going to use today's number on the refinance in a future year because I know people like to be able to predict this. Basically what I'm doing is I'm predicting that future value based on the future rents. So we get $35,200 in new rents, $422,000 annually. And as you can see, the number is $432 after parking and laundry. And this property, I actually haven't put laundry in each suite, which I usually do. We kind of didn't need it, so we would continue the rental. Utilities are going to stay the same. I mean, they might go up. Property taxes might go up a little bit. Insurance, but we can't predict that into the future. That's going to get offset a little bit by those increases in rents. Hopefully the expenses are going to be lower than the increases in rents, but we're just playing that game here right now. So we have our laundry rental, a vacancy allowance, and I'm going to go ahead and refinance this on a CMHC mortgage. So this should be 1.79. So if I went ahead and got a 10-year mortgage at CMHC right now, I mean, 1.79 is the highest I've heard of, but you can go ahead and get, you can get 1.3 on a 5-year, but we're going to take a 10-year mortgage because, if we can solidify that, basically what they like to see is a 1.1% debt coverage ratio from the lender point of view. So let's try 70%. Let's see what that would look like on a debt coverage ratio. So 1.15, that means we can go up a little bit. So, and nothing's foolproof. I'm sure I could get a spreadsheet that could calculate all this type of stuff. Yet, you know what? I kind of like playing with the numbers anyways. So this just lets me do that. So 1.1, we're not going to get much better than that. So I think we're going to get about 72.5% on a first mortgage at that 1.79 rate. That basically gives you a cash flow of $16,000 a month at a 4.5 cap rate. Now, I'm using a 4.5 cap rate. It gets automatically calculated. So in this formula here, it's basically the net operating income divided by 0.045. If I wanted to, I could do a 0.4. That's going to obviously change our value on our first mortgage. We're not going to get 73% because, again, they're still going to lend up to that 1.1 times. So let's just keep it at the 4.5. You guys can use your own numbers in this. This is just kind of how I do it. I'm pretty sure when I come to refinance this building that a 4.5 cap rate will still be good, especially given the low interest rate environment. Now, basically what I do is I want to less my new first mortgage by my total investment to see how much money I have left in this building or if I have any. My initial investment was 1.819 million. So let's call it 1.8, and I'm getting about 1.75 back. So I'm going to have left in this building as an investment. I'll just put it up here. So I have $74,000 left in the building, and I have an equity of $1.77 million. So maybe I don't pull out all my money yet. I'm cash flowing this thing, $16,000 a month. I have $70,000 left in the property. That pays it off back in 4 or 5, let's call it 5 months. Guys, you tell me if this is a good deal or not. You let me know down below. So everyone, thanks so much for watching. Don't forget to smash the like button. If you guys are interested in any of these properties, we have 7 that we're gonna sell. This one's going on the market. Obviously, it's on today. The other ones were exclusive. We'll be putting them on the market if we don't sell them off market beforehand. So if you're interested in any of those, we have 9 to 32 units that are all going to get liquidated at some point during the year. So if you're interested, definitely reach out. Yeah, and if you guys do like these videos, definitely smash the like button. If you guys are interested in the analyzer or any of the other stuff, definitely check out the premium group that we're setting up right now. All right, guys, thank you so much. We'll see you in the next one.